And thousands of small businesses in sub-Saharan Africa say continued currency depreciations and higher interest rates have contributed to higher sovereign debt for their countries. This is what businesses have expressed in this year's Standard Bank Africa Trade Barometer. These factors have also led, they say, to foreign currency shortages, particularly the US dollar, in most of the continent, significantly impeding cross-border trade as businesses struggle to acquire the necessary foreign currency to pay for their imports. I caught up with Standard Bank's author of the report, Myburgh, and also asked about South Africa and Zambia being the only two countries experiencing a fall in business confidence.
We found that there's a massive gap in terms of data regarding trade on the continent. We all know that you can get certain types of data points from the likes of the World Bank, World Trade Organization, etc. However, they often don't quite tell you what's happening on the ground with small businesses on the continent. So we believe with our footprint and our capabilities that we have as a Standard Bank group across the continent that we could play a role in this. And that's the Africa Trade Barometer was born, where we combine some of those data points, as previously mentioned, with on-the-ground insights from businesses that represent all the sectors and segments in 10 of arguably Africa's most dynamic markets. If you combine the GDPs of these 10 countries, you get to 66% of Africa's GDP. So it's a very representative view of what's happening on the continent. We interviewed 2,500 businesses. The barometer is very much swayed and biased towards SMEs because we believe that the SME voice regarding trade is underrepresented. So then when you go through this barometer, you'll often find that some of the things that you typically read in the media around trade on the continent are sometimes a bit different because those views are shaped by large corporates, by multinationals, and by views that perhaps some of those organizations like the World Bank establish, whereas the SMEs at times have a very different view. Now, in terms of the findings, we cover various themes that are important to trade and businesses on the continent. We look at what businesses are saying around how government is supporting them. We're saying around how do they feel about the economy? What is their business confidence like? Are they getting the necessary support in terms of finance? And then critically, per your allusion, you alluded to the fact of infrastructure. We often spend quite a bit of time in the barometer really diving into the infrastructure component because we know that there's barriers to trade that are tariff-related and that are non-tariff related. When it comes to non-tariff related, infrastructure plays such a key role. So, yes, unfortunately, the picture around infrastructure is again not very good. Many businesses are saying to us that infrastructure is a key obstacle to them growing their businesses and then trying to trade with the rest of Africa and the rest of the world.
Something else, Philip, that rears its ugly head all the time, it's always there, and that is access to the US dollar. And as far as it is quite an important currency when it comes to trade, still for countries that you have surveyed in this Africa Trade Barometer.
Access to the US dollar is typically a challenge on the continent. Looking at multiple countries across east, west, south and central areas, the barometer confirms that point again, where businesses are saying to us they're struggling to get access to US dollars so that they can do the necessary imports that they need to make to do business and to stimulate their local economies. Now, how does this happen? And of course, the US dollar is synonymous with trade in Africa because to import anything, you need the dollar to do much of that, whether it's intra-Africa often or whether it's trading with the rest of the world. The challenge has been accentuated with the rising interest rates in the developed world. That has meant that so many of these countries that have foreign debt that they need to service, the interest payments on that foreign debt, which is often in dollar-denominated debt, has meant that the dollars that they had in these markets got sucked up into repaying these significant debt repayments. We know that many markets are not diverse in terms of generating foreign exchange. They're often reliant on one or two key commodities that they export, so sometimes the prices of those commodities also impact the access and the flow of the dollar. So that has meant that a limited supply into the market, and naturally then meaning that African businesses, a lot of them can't get that dollar to stimulate and pay for those imports. Now, in terms of addressing that challenge, there's a lot of options, and there's a lot of initiatives currently underway. One of the things, of course, under the umbrella of the AFCFTA is driving the Pan-African Payment and Settlement System initiative, which would allow African businesses in African markets to pay each other cross-border by paying in local currency, and then the receiving business receiving in local currency without the need for the US dollar in those instances. That, to me, is a lot more feasible and practical and within our control to implement than perhaps some of these other initiatives that's getting more broadly talked about, whether it's a common currency for Africa, whether it's a BRICS currency, etc. Ultimately, of course, it would be fantastic to have optionality in terms of currencies. We see the use of the Chinese yuan becoming more prevalent in some of the markets. So optionality is fantastic as an alternative to the US dollar, but I do think we have to be realistic around what we can control and what we can't control.
Business confidence among the countries, in the majority of the countries that were polled by Standard Bank, has actually increased. There's an improvement there. But South Africa and Zambia were the only two countries experiencing a fall in business confidence.
It always astounds me. This is the third issue of the Africa Trade Barometer. And every issue that we've had, it surprises me the level of business confidence of businesses on the continent versus the significant amount of challenges. Because, you know, the list is long. If you just look at infrastructure, we've spoken about it, whether it's rail, port, power, the challenges are significant. And yet, in the average, businesses remain far more confident than what you would typically assume. And we put that down to a couple of factors. One is African businesses are extremely resilient. There's never been a time when it's been easy to do business in these respective markets. Businesses have found a way to make things work. They've found a way to circumnavigate these challenges on a daily basis. So there's extreme resilience and there's extreme optimism in many of the countries across the continent around future prospects. And the barometer also shows that most businesses on the continent expect their turnovers to increase. Closer to home, yes, South Africa's business confidence in this barometer has gone down from the previous one, and power has remained and one of the reference points. Power, incidentally, is a significant challenge, not just in South Africa, but across the continent. It's rated in the barometer as the number one infrastructure obstacle to trade. It's also referenced as the worst performing infrastructure if you compare the types of infrastructure to each other. So it's a significant impact, not just in South Africa, but in the rest of the markets too. 2% of our GDP is probably attributed, the loss in GDP is attributed to power challenges. If you look at a big market like Nigeria, $29 billion worth of business losses a year gets attributed to lack of power there. They had a complete grid shutdown again last week. So it really is a massive factor that's inhibiting growth and trade specifically on the continent currently.